All right, so in this video, I want to go into detail on what the CVD is, explaining it in the most relatable, understandable way. Then we're going to go through some different types of divergences that you're going to be looking for on the CVD. So we're going to have a few strategies that come with that. And in the last part of the video, I'm going to show you where you can find the best and the most powerful levels of support and resistance. So you can have a full strategy. You will have the strategy with the divergences, and you will have the levels to look for. That way you're not just trading any divergence in the middle of the chart, not knowing exactly where you should expect a bounce or a rejection from price. So starting with the CVD itself, first where you find it for free on TradingView, you go to indicators here at the top. In the search bar you type in CVD. And here I've saved it already. You have the yellow star. It's the basic cumulative volume delta. Okay, so you click on it, then you have it on your chart. It's going to be at the bottom here, the same way you would have an RSI or a MACD, but this is so much more powerful. Like, it's ridiculous compared to the CVD and the RSI. There's like no contest. And let's get into it right now. So let's put the CVD a bit bigger here. What you're seeing here in each of these candles is whether it's, first of all, it's the market buyers and sellers. So the people that are clicking on the button, market buy, market sell, okay? You're not seeing the limit orders. So in each of these candles, by the way, I'm sorry, I have some construction in the neighborhood. I hope it's not going to be too much of a hindrance. So let's stay focused here. So in a big candle like this, green candle, this means that they were more market buyers than market sellers, right? And I know this sounds obvious, like, duh, yeah, dude, obviously I see that on the chart, and if candle's green, that means that they were more market buyers than market sellers. Well, not exactly, actually, and I'm going to prove that to you in a minute. So a green candle on the CVD means that they were more market buyers than market sellers, and a red candle says that there were more market sellers than more market buyers. Sorry. So it is the delta. That's why it's called the cumulative volume delta. Now, what does delta mean? Well, let me give you an example. I'm a terrible drawer, but you'll get it. So let's say we got a red candle here. Oh yeah, I don't even need a drawing, right? We have a red candle here on the CVD, right? This would be on the CVD, not on the chart. You have a red candle. Well, what's going on in this candle? You have market buyers and market sellers within the candle, right? It's not just all sellers here. So let's say you have 100 sellers within that candle, and you have 70 buyers. Let's make it green. Okay, never mind, you get it. 100 sellers and 70 buyers. Well, if there's more sellers, there's 30 more sellers than there are buyers. So the candle does go down indeed, okay? That's the delta. The delta is minus 30, okay? All right, you get it, right? There were 100 sellers, 70 buyers, so the difference is 30, is minus 30, right? More sellers, minus 30. Now, if we're trying the opposite, in a bullish situation, you would have a bullish green candle. And in this case, let's just take some different numbers, but the same idea. Let's say you had 120 buyers and you had only 80 sellers. The candle went up. The delta would be plus 40, right? There were 40 more contracts bought compared to the sellers, right? So the candle went up. That is the most basic part, okay? This is clear enough, I believe. The delta is the difference between sellers and buyers. If there's more sellers, then it's going to be a negative delta. If there's more buyers, it's going to be a positive delta. So far, easy. Well, it's all pretty easy, actually. So now let's get back into the candle. You can see this is a green candle. There were more. I don't know how many there were because you would have to look at the order flow, but this is going to be enough to look at. You don't need to pay for an order flow platform, although it is way better to have it. This is going to be just perfect. So what does happen sometimes is that you have a green candle with more buyers, yet on the delta, on the CVD, yet you're going to have a red candle in price. And this happens right here. Okay? This candle is red on price action. It opened here, it closed here, it went down. But there were actually more market buyers on the CVD. You can see the delta here was positive. So let's say maybe they were, it's not a big candle, so I don't know, let's say they were like 70 buyers and 40 sellers, right? The delta was plus 30. I'm just making this up. So we had a positive delta, but price went down. What does that tell us? Well, as we said, in the market, you have market buyers, right, that are clicking on the button. But what you also have is market sellers. Limit sellers. Here you have a range, and you can imagine that within this range, there are people placing orders, sell orders. So every time that you have some buyers, they kind of get rejected. You see that all over the market, right? But when you do see some strong market buyers, right, aggressors you call them, but the candle goes down, that means that on the order flow, there were actually plenty of little limit sellers that every time price went up, it actually pushed, sellers were pushing price up, while the limit orders were stronger. The limit sellers were stronger. People were putting orders there, countering the buying power, okay? This is what you call absorption, right? When you have market buyers and the limit orders are actually absorbing the buying power, right? They're buying, but they're not pushing price up. In fact, price is going down. That means that you have stronger limit orders, right? Stronger sellers in this area than you have market buyers, okay? This is absorption, and it is a very powerful thing to look for on your chart. Because if the market, if the buyers are failing, that means that you might want to be on the side of the limit sellers. And this is what you would call a first kind of divergence, right? Because there is a divergence between the delta, positive, and what price is actually doing. So from here, you can already be looking for a short, because you might have had, you don't know how many limit orders were in this area. We will get to that in the final part of the video. But here would be a great short, okay? Once you see the range here, you're like, I don't know what's going on. I don't know how many orders there are, but now I see that the longs are failing. You have all these wicks, which is already an interesting indication. But once you have this green candle here failing and actually reversing on the chart, that's your confirmation to enter a short. Okay, we'll see how we can make this strategy more powerful with the actual order flow at the end of the video, but this is already a great kind of setup. I'm going to give you another example of this, and then we're going to go into the different kind of divergences, which is maybe even more powerful. But in this case here, same principle, this time is for a long. We see we're kind of ranging in this area. We have a red candle, red, red, so no divergence, green, green at the bottom, red, red, green, green, red, red. And then what happens on this candle? You have red sellers here, trying to make a lower low, by the way. Red sellers here, okay, market sellers, but a pretty strong bullish candle. So what's going on here? We got some limit orders within that little range here. At the bottom of that range, we have limit buyers in this case, who are being who are being more powerful, they're buying power, they have more buying contracts than whoever is selling on this candle, market selling, okay? Again, that's a great setup. You can put it at the bottom of the candle, a bit lower here, don't be too greedy, and you get a win, okay? We're on the 15-minute time frame here, by the way. It's my favorite time frame for this particular kind of divergence, and then we'll go to the 5-minute to look at a different kind of divergence. Now here, what happens here? On this candle, I'm going to move the line here because I really want to look at that candle. It's this candle right here. We're going down. No divergences here, but then on this particular candle, this one right here, we have strong sellers, pretty strong sellers, right? Red candle, pretty strong sellers. And yet we have a big wick and the candle closes bullish, okay? Big wick and the candle closes bullish. So these sellers completely failed. So this means we had some limit orders absorbing. Again, it's absorption. That's a very important concept and it's the most important one. Absorbing here all of these sellers and pushing, in fact, pushing price up. Okay, negative delta, but bullish price action. That's a divergence. Now that was the last example for the, and by the way, let's just say we took a long here, right? Something like that. Bottom of the candle, a TP, wherever you want to put it. Don't be greedy. I say that in pretty much every video. I'm not a greedy trader. I find very good setups, high win rate setups, high probability setups, and I'm not too greedy. 1 to 1.5, 1 to 2 sometimes. Okay, now, second type of divergence. It's all the same principles. It's going to be absorption as well. This time we're going to go on the 5-minute. I took a lot of examples here. And we're looking again for this idea of absorption, but this time we're not looking for absorption within one candle. We're looking for absorption from one high to another. Yeah. From one high to another. The same way you would look on an RSI, like a higher high or a lower high. So yeah, on an RSI, you would look for one high and then a higher high, but the RSI is making a lower high. Here we're looking for the opposite. We're looking for a high on price and a lower high on price as well. But here we're looking for more buyers. So a higher high on the CVD from here to here. This is a higher high. You have more buyers, way more, by the way. You can see that's a big divergence. Way more buyers from here to here. But price is absolutely unable to even go to the same high, and it's certainly unable to go higher. What does that tell you? While price is pushing up here, there are a lot of limit orders here, 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 that are absorbing all of these buyers, because these buyers are really aggressive here. These market buyers are really aggressive, and they do push price up, but they are completely unable to push price higher than here. There's way more buyers in this whole area than we had here, right? But we are pushing price up, but not higher than here. That's absorption. Okay? And then here you can wait for a confirmation candle. You could actually enter from here. But if you want to wait for this range to play out, say if we don't break out, you could have maybe entered from here. That would be better. Or wait for more confirmation, but then your risk to reward is not that great. When you see such a huge divergence here, right, that's aggressive buyers completely failing, and then the buyers are kind of going away, and then the sellers on this candle, well, they enter pretty decently on this candle. Oh, and by the way, you have another divergence here. Within that little range, look, from this high, here we're staying flat on price, right? We're not making a higher high. But we have, again, strong buyers. We have a higher high from here to here, but we're staying flat here. So there's absorption even within this little area here, okay? So you wait for your confirmation candle, which would be an engulfing kind of candle. You could have entered from here, you know, that's for you to figure out. But what we want to focus on here is on these divergences, okay? That's absorption, again, absorption. More buyers, but price is not doing what you would expect it to do. There's a divergence, there's absorption, okay? I'm just gonna go through a few more examples. This is exhaustion. We're going to get into it. It's going to be the last one, but it's way less powerful. So we're not going to be, I don't use it for my strategy because it kind of works as poorly as an RSI. You can have a lot of exhaustion in a row and you're never going to get what you're looking for from price. Okay, so this level here, equal highs, okay? But on the CVD, you have way more buyers here, and yet it's not breaking the highs, right? One high, a higher high, but here you have equal highs. Even though you have more buyers in this area, the price is absolutely unable to make higher highs, okay? I'm just looking at different stuff. And you can see, by the way, that's not enough of a confirmation by itself, but it's still pretty good. Green candle on price, green candle on the CVD, and here what do you see? Green candle on price, red candle on the CVD right here. This one. You could have actually shorted that from here because you have a double divergence. You have it very locally on the 5-minute on this precise candle, which has a strong wick, which is failing to make higher highs, and yet you have buyers. So that's that's the first type of divergence we spoke about at the beginning of the video. Plus, you have this divergence from this high to this high. Like that's kind of a perfect setup, right? Making equal highs, we're not breaking them. So I'm going to go through one last example here for this. The absorption example, then I'm going to take you through the exhaustion example, but it's less powerful, so you're not going to use that. Well, I'm not using that for my strategies. So what's happening here? We're making lower lows. Oh, wait a second. That doesn't work at all. I'm sorry. It's not a good example. We're making lower lows here as well. My bad. The price is converging. We're making lower lows here, and we're also making lower lows. We do reverse, but that's not a setup for me. Do I have any other examples? Yes. That's a nice one here. So, on the CVD, we are going lower, so there are way more sellers here on the CVD, and there's actually aggressive sellers right here, okay? There's way more sellers on the CVD, but price is not going lower. So all of these sellers here are being absorbed by limit orders in this area, okay? Then here in this area, let me zoom in. In this particular area, we still, well, we're putting equal lows here on the CVD and on, well, technically, no, you have a little divergence here too. We're making higher highs from this wick to these lows, and we're making slight lower lows, hardly, but that doesn't matter. We're not looking at that. What matters is the huge divergence from this low to this low, and the huge sellers that we have here. Way more sellers than we had here, and yet we fail to even get close to these lows, okay? So then you can wait for your confirmation candle here. Stop loss at the lows and TP again. Let's call it 1.5. We're just going to stay on the 1.5 risk to reward for these examples here, okay? And eventually, what do you see? Big buyers stepping in here. So the market sellers are failing, and finally, the buyers are coming in. So you could enter from that candle, but you know it wasn't that bullish, so just wait for this one. Oh, okay, this is a trade that I actually took yesterday. I made a video about that yesterday, but this is an interesting one as well. You don't really have a divergence here, not really. So let's not count that because we're making a lower low here, even though it's almost equal lows, and we're making lower lows here. Oh, Yeah, it's not really a divergence, but you can see though, you can still see that. We are making a slightly lower low. I would even call that equal lows. And yet we're making some way stronger lower lows on the CVD, right? So there's aggressive sellers from here to here, and yet we're making like a tiny bit of a lower low. But we're going to ignore that because it's not a perfect divergence. What we're going to look at here, though, is very interesting. Get rid of this now. We are making equal lows, let's say, but even kind of higher lows, and yet we're getting aggressive market sellers here. So within this range, it's not budging, it's not making lower lows, it's not breaking to the downside. And we have all of these sellers, and yet price is holding this range and eventually even giving us a bullish engulfing candle. Now, let me zoom in again. We also have our first type of divergence, is we have a red candle here and a red candle here, okay? And we have a very bullish, normal bullish candle, kind of doji, but now we have a very bullish candle here. That was my entry yesterday. Right? Bullish engulfing above these candle highs here, not the wicks, but above these candle highs. Bullish engulfing, red candle, okay? This red candle is green on the chart. This red candle is strongly bullish. And then we have our confirmation here, okay? So that is my last, what's that? Oh, we had another one here? Yeah, that's interesting, okay. So this one gets us into two things at the same time. It's not a strategy that I prefer, but we're going to look in this case at exhaustion. I'm going to make the lines gray because I'm not a fan of this strategy, but this one had two confirmations. So we had equal highs here on the price action, but we had lower highs on the CVD. What does that tell us? That tells us that even though price is going to similar highs, well, the buyers are not really there. The buyers are exhausted. They're like, yeah, we're going there, but there's no more passion, right? There's no more really aggressive buying. So it doesn't justify for price to be that high, right? It tells us that even though we're going there, we don't really have the buying power that we're looking for. I'm not a fan of exhaustion itself. I'm not using it that much. I do use it here. I got stopped out from this trade because I got a wick. I remember I took this trade and I got stopped out because I made a silly mistake. I took a short here. I was not a fan of it that confident because it was exhaustion and not absorption. I put my stop loss like literally at the top of this candle and I got wicked out not on TradingView but on my actual Top Step account. That was a silly mistake because it did actually work out. Because it's not a great setup because we had the exhaustion, and again, I'm not a fan, but what did make it better is that this candle right here was a pretty strong green bullish engulfing candle. So we had pretty, let's say, aggressive buyers, but we had a red candle here, okay? So it was a pretty decent setup. I just got stopped out. So that's exhaustion. I'm going to show you some more examples of exhaustion, but it fails a lot, actually. Like the RSI divergences fail all the time. Eventually it works because you're gonna have like many divergences in a row, and eventually it's going to reverse, but I just don't like it. Yeah, here, I think it works out here. And make the CVD a bit bigger so we can really spot the divergence. So price is making lower lows from here to here, and the CVD is making higher lows. So we're going lower, but there's not that much selling interest in the market. The market sellers are just not there. They're not that interested. Okay, so that's exhaustion. But again, it's not good enough. Now, do we have a local candle divergence somewhere here? Yeah, actually, that's interesting. we have the buyers failing. We have the buyers failing. You see, it's not a great setup. We have exhaustion, and yeah, we have the buyers failing, sorry. Yeah, we have buyers failings, we're looking for longs, it's not a great setup. Eventually we do go up, great for whoever was long from there. But you can see green candles, these buyers are failing, price is going down. So it kind of should tell us we should go down more. But that's not what we're interested in. By the way, so this is actually a good example. Here you could say, hey man, we have buyers failing, we're going down, I should short, right? These buyers are failing, so there's limit orders selling. Yeah, sure. But this is not the strategy. We're not doing like kind of breakouts with this strategy. What we're looking is for buyers failing at the top, okay? Oh, but here, that's a good example. No, that's not a good example. Yeah, this is what we're looking for. We're looking for buyers failing at the top, not at the bottom as a breakout strategy. We want them to fail at the top. Now here, we just have one here, another divergence, okay? From this high to this high. No, I'm sorry, this is, again, I'm sorry, I'm confusing myself because I'm going through a lot of different strategies here. Yes, no, fuck, Jesus, good Lord. I told you guys, it's a tutorial for dummies by a dummy, and that's a perfect example, okay? So here, that's what we're looking for. We're looking for buyers failing to make higher highs. That's a short right here, okay? So be careful to look at this. You're not looking for like any place, oh, buyers are failing here at the bottom, I'm gonna short. No, no, no. You want to find some highs that fail to make higher highs with buyers failing. You have more buyers here than you had here, and yet you're failing, okay? By the way, you would have taken a loss because you had let's be clear here, the strategy doesn't work 100% of the time, obviously. But if you would have taken a short here with the same logic, because from this high to this high, right? So here you had buyers failing, and we had our confirmation to go down, you would have failed. But you could have taken the second setup, and that would have been a win, okay? But do not look for any divergence within candles again, huh? Oh, look, these buyers are failing to push price up, we're going down, I'm gonna short this. Don't do it. Or I mean, you could, I guess, scalp this, but it's not a high win rate strategy at all. You would have got a win here, I guess, you know. So you're looking for divergences at the highs for selling, and divergence at the lows for buying, obviously. Okay, so exhaustion, I went through it, it's not interesting. The most important is the absorption setups, okay. Now for the last part, and we're gonna go back to that setup, I made a full video about it yesterday. For the last part here, what happened here? Why did I take this long? Well, because here we had, I believe it was 67 buy orders, and this is gonna be perhaps the most important part, because this is my main strategy. The most important part of the strategy is figuring out how many limit orders you have, because we see we have absorption, right? These market sellers are being absorbed on the CVD, but we don't know how many orders there are. Is this really a strong level? Are we going to break through it? What are the chances? You know, what's going on? Well, you go to YouTube, you have guys like OTL signals. Don't take the signals, they're absolutely terrible. But you don't have to worry about most of this. You'll just look, I did like tons of videos on this, but you just look at the COB, the current order book. You just look at this column here, and you're gonna find the limit orders, the limit sell orders and the limit buy orders. You're only gonna be interested in sell or buy orders that have above 50 contracts. So here at 33.50, you have 52 sell contracts. I'm interested in this level, so I'm gonna write it down on my chart and see if I get some divergences on the CVD. You can see that I wrote down that level already. It's at 32.50 on the futures. Here I'm on the spot chart, the currency chart, so the prices are different. But I know that in this area, there is a lot of sell contracts. So I'm interested in this level if I see my confirmations on the CVD. meaning if I see more buyers on the CVD, let's say, okay, this is what I want to see. Let me think a second, what could be looking good here on the CVD. But essentially, I want to see a divergence. Maybe that's what I would want to see. Okay, let's say this. What could I want to... Yeah, I want to see the same thing. I want to see within a small range here. Sorry, because I have the construction there, which is kind of breaking my focus. But in this area, I want to see a little range form, right? And I want to see on the CVD, I would want to see more buyers, right? So the CVD going up, but the range just staying and even maybe going down, okay? So this is going to tell me we're filling these orders. The buyers, the market buyers are trying to push price up, they're failing. And then eventually I want to see a bearish candle here, engulfing candle, right? Okay, bearish engulfing candle, 1 to 1.5. And I want also on the CVD, I want to see a decent, bearish candle too. Well, actually, no. What I would love to see is as we're making a bearish candle here, I want to see like a small bullish candle or a bullish candle of any sorts. The bigger, the better, actually. So it's going to be like the last attempt before the breakout for buyers to buy. And then that would be the perfect setup, right? And then actual red candle. So we will have the perfect divergence, okay? So there it is. You have the whole full package strategy. You know what the CVD does. You know what the delta within the CVD is. You know where to find the orders. If you want to understand this better, because I went a bit quickly through it, go through my previous videos. I go into way more detail, and I'm going to link actually the video in the comments. The top comment is going to be a link to the video you have to watch to really understand what this is, what these orders are, how to choose them, how to draw them on your chart, and what kind of confirmations you're looking for, okay? So I'm going to put it in the link, the video, with the strategy that allowed me to pass my last challenge in 3 days, I think it was. Okay, that's it for me today. Hopefully this was clear enough for you guys. And if you have some questions, just ask in the comments. I'm happy to answer them. And I'll see you guys in the next video.